Happy Wednesday. This is Dr. Jeffrey Scott, and this is my Market MRI Pro update for Wednesday, August 13th, 2025. I titled this one kind of basic rotation into the broader markets. The MAGs lagged, and the Russell continued to lead as we breadth improves. Question is breadth improved too much too fast? We'll take a look at that. Again, Jeffrey Scott. My email is marketmripro@gmail.com. Google Groups Top Down Trader. Give me some love. If you like these videos, subscribe. Hit the alarm button so you know when I post them. If you like them enough, hit a thumbs up. If you don't like them, hit a thumbs down. If you got some constructive comments, positive or negative, throw them in the remark section. The more people that hit the thumbs up, the more likely people will see this, except for the 3 people that know me. In addition, we'll talk about my Google group in a few minutes. I love doing these. I just wish I had more people that watched them. How's that for an honest comment? This is for educational purposes only. Everything I talk about should be taken in the spirit of education, not investment advice. I do this to demonstrate how to use my Market MRI Pro or other top-down trading tools. Remember, trading involves risk, and you alone are solely responsible for any decisions you make. I, on the other hand, can own, buy, or sell anything I talk about without letting you know, especially when I sell them. And trading stocks and options should be considered risky and should always consult with your financial advisors before making trades. And as I like to say, I'm a cancer doctor, not a financial advisor. And I've got tools in multiple platforms with the next one to come out as soon as I sign off on it, which will be soon as the Metastock platform. Google Group is where I post things. I invite people to special sessions. I don't always post these on YouTube. I sometimes will banter during the day when I see something, and occasionally other people will banter back. It's free. You get just for signing up $100 off anything of mine you buy, and you'll get opportunities for even more. Just go to Google Groups, go to all groups, look for Top Down Trader, sign up, let me know how to contact you, and we're done. Speaking of done, not done yet doing live meetings, I might be based upon demand, but I do have one that is booked. Deposits are paid and will happen whether we have 10 people or 30 people. Palm Beach Gardens, Marriott, off of PGA and I-95, about 15 minutes Uber ride up from the airport, and you can Uber because I'll feed you where you're at. It's 2 days on October 26th and 27th. Excuse me. Yes, October 27th and 28th. I'm sorry. And if you really want to get educated, come early and go to John Person's seminar, October 25th and 26th. If you attend my seminar, you'll get a $400 rebate towards purchase of any of my tools, which means if you are new to me, you can get 400 bucks and 100 bucks for joining my Google group. And if you've bought any of my other tools, you'll get additional discounts. I charge $12.50 for the meeting, um, breakfast, lunch, and dinner on Sunday. At the minimum, breakfast and lunch will be covered on Monday. We have a dinner cruise on my boat, Stocks and Docks, Sunday Eve. It's a full service Marriott, and if there's enough people that want to go out to dinner, I'm not saying I'm treating Monday night, but we'll see how that goes as well. Call me or reach out to me at marketmripro@gmail.com for more information. Big day on Thursday. Da, 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 da. Not only do we have jobless claims, but we've got a PPI. We've got a lot of debate among the Fed heads. It seems fait accompli that we are going to get a rate cut in September. We had Bassett talking about 50 basis points. I think that might be overreaching. And we still have the bond vigilantes who say if we cut rates, the long end of the market, the 10 and 30s will actually go higher, which isn't good for our debt. So it's an interesting time. I don't think it's a slam dunk. And then on Friday, I think consumer sentiment is going to be interesting. How has inflation and tariffs impacted on the consumer? But then there's a host of retail sales, import prices, et cetera. And oh, yeah, we still have some major earnings. After hours today, I think Cisco, people didn't love it. It was down a little bit in the beginning. And then I think people talked it higher. Last I looked, it was up a little bit. Um, the rest of things that I noticed were actually down. I'll give you a little bit of a reading on that. Let me just go into one of my tools. Cisco's now up after hours 0.8%, so really flat. DLO up 21% on earnings D local, whatever that is. IBTA down 21%, NOA down 16%, and COHR down 16% on a combination of earnings and a divestiture. He was announced earlier in the day. Thursday, we still got earnings. Applied Materials will be a big one in the after hour session. John Deere, JDCom in the morning. You can see what's there. As I like to say, it's a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. Here is the E-index from June. So one thing that might bother me a little bit is we had the last 2 days have seen a substantial rally in the U.S. markets. Our E-index hardly moved today. In fact, long-legged dojis. I think it's a lot of rotation. Some of the things that were down are up. Some things that were up are moving down. And the small caps have finally joined the party. Any issues with the Market MRI Pro software, Praveen can be reached at coding@marketmripro.com. I can be reached at marketmripro@gmail.com. And consider joining my Google group. A lot of questions about when the next update's coming. Well, I think it's because we spoiled the beta testers. We updated, and they spoiled us, so it was a mutual thing. We updated every couple of weeks as we brought more features out, but then again, we didn't have half of what we have today when we first launched. Worked a little bit with Praveen today. I've asked for to get price crossing moving averages, so the 1750 and 200 up and down, stocks within a certain percent of those moving averages to look for stocks that are having big signals while they're sitting on top of the moving averages. I've got a new trading model that I've talked about and demonstrated at some of my educational meetings that is being added. We're fine tuning the chandelier stop. And then there's probably countless other things I'm forgetting. We added a bunch of new scans as well. So there is a lot coming. And, my philosophy is this is not a pay once and be done. And you pay once to get the product and you pay annually for the data and the updates. And any feature that I ever add that is driven by me and not a third-party educator will be provided to all the people that have the product. Now, if I bring in an option specialist who has a cool, unusual options indicator, and we can bring that data into the program and come up with something that goes on the charts, that's their tool, not my tool. So that would be incremental. If and when we launch the John Person update, that's his tool, not my tool. So that'll be incremental charge. Let's go take a look at the charts. So interesting day today, and another day that really rallied in the afternoon and closed near the highs, at least for some of the market. What do I mean? Bitcoin was up 2.78% today, closing at the top. Russell, which was only up about 0.5% in the early afternoon, ended up finishing up almost 2%, closing at the 94th percentile. The diamonds, 1%, the 94th percentile. The spider, only 0.3%, 34%, 63rd percentile. And the Qs really flat, 0.05 at the 3rd percent, 32%. No surprise, large cap tech is rotating out, small caps are rotating in, and that's why I think we've seen some of that change. That's a super strong day again. In fact, if you look at a 5-day change on the Russell, 4.85% move. Bitcoin, 6.59, dwarfing any other moves that we see. Remember, the Russell was the furthest away from its all-time highs. If we look at the new highs and new lows, boy, we jumped up a lot. And the new lows at 52 weeks, only 856 new highs in the NYSE. On the NASDAQ, 145 versus 34. Big improvement. Like those double digits. I like to say and think that new highs and all-time highs are built on new highs, not on new lows. If we look on the right, similar to yesterday, most of the sectors are up, whether they're populated by the S&P 1500, the NASDAQ, or the NYSE. Most of the industry groups are up, and 87% of stocks in the S&P 1500 were up, only 69 in the NASDAQ and 76 in the NYSE. Still incredibly bullish and powerful. The breadth has improved substantially. Now we have to ask the question, when is it too much? If we look at one-day change on my themes, first we'll look at the S&P 500 sectors. The only thing that was not up was staples. Interestingly, yep. And then technology was really flat at 0.04. As I said, big cap tech sold off. So the defensive plays underperformed, plus technology and materials, healthcare. That's a big change. We talked about it yesterday, how big of a move it's had over the last week or so. Discretionary and then energy were the top four. So this tells me we had a super strong day in the market. It's funny, accounts of mine that are heavy in mags, kind of flat today, did okay yesterday, and accounts of mine that are heavy into small caps, boom, crazy days. And I've been waiting for that rotation. Timing model. Well, let's see if anything happened today. This is weekly. We want to look at the daily. The weekly's been in a buy for some time, not worth really talking about. So it takes a second. We'll pull up all the daily data here. And yep, we've now flipped to a buy on all four, the spiders, the Qs, the diamonds, and the Russell. You could see on the spiders gapping up and giving us a doji at an all-time high. Concerning, maybe. The Qs setting an all-time high and reversing. Concerning, maybe. And then look at the diamonds closing, again, not at all-time highs, but right off the highs here. And the Russell closing at their highs. Both of those look super strong. Let's just look at the weekly just to look at where we got to go. We've got to go up to this gray bar on the NYSE, and we got close to it before, and we're almost at that point. Unless this market sells off on the PPI, there's a chance we're going to get that this week. The Russell, man, it's got a long ways to go still. Kind of looks like not that much, but another 5% or so. If we look at the index ETFs, you know what? We're going to go faster today. I'm not going to blow them up because did anything change today? You could see here 1.21 up on the spiders. Again, all-time closing high. This is a day. Oh, I'll make this daily. My bad. That was the weekly move. Here's your doji up 0.34 on the spiders. All-time high though. Getting into the seasonality flat period of time. Qs, again, they had the reversal, actually finished up only 0.05, getting into a seasonality weaker part. Diamonds launched, and the question is, I didn't want to do that, did I? Let's go back to, will the diamonds get back to new highs? We said before, they're just underneath. The Russell is making a move on them. Russell was up 1.96 today. And I want to see something. Let me change this to 100 bars. Just wanted to look at how the Russell, there you go. Closing at the highs, but like everything else, we're going into a sideways seasonality. At the top of these are the high jumps. Let's just look at the high jump on '86 on the S&P, not the end. The Qs, '89, getting up there, but could still go a little higher. The diamonds, nowhere close to extended on the high jump. The Russell should not be close either. Let's get to the right day, Jeff. Nope, not close yet. 52. So by high jump, the spiders and the Qs are getting to an area where we typically see reversals, but they're not maxed out, so they could still go higher. If we look at the commodities, Doji on gold up a little bit, 0.31. Nicer move on silver, gapped up 0.67. Oil broke down below the 200. Natural gas is dead to me. And positive news today, 10-year and the 30-year were both down less than what, about third of a percent or so, 0.24 and 1.17. Is that what I'm seeing? So they were down a bit. And the good thing is you want to see them below the 5%. Again, I think that's something that I'll be watching closely as we go forward. The buckets give me a sense of where the stocks ended up. And we're, again, to the theme of getting too hot, 14% of the stocks in the NYSE are above their Bollinger Bands, only 10% in the NASDAQ, 18% in the Russell 2000, 16% in the S&P 1500. If you think about Bollinger Bands, there's two standard deviations. That means 90% of the time, a stock's price is going to be between the upper and the lower band. Now, if 20% of the market starts to be 19%, 18% above their bands, tells you we're getting frothy and we might be looking for other evidence that the market's going to pull back. We might have another day or two, but if we have a big move on PPI and get a bit of a blow off top, we might trigger some overbought signals that could play out the theme of a sideways market to down the rest of August and September. Just talking out of my head, thinking what could happen. Looking at the market breadth tool, you can see NYSE, super strong day, not at all-time highs, well above the 50, closing at the high of the session. The NASDAQ composite up, but reversing from the earlier highs. Stocks above the 50 in white, 200 in red, and 17 in green turned up, but they're not at extreme levels, so there's no signal there. When we go down to the new high, new lows, we know they were positive and finally triple digits for both. They've been up mostly over the last couple of weeks. AD line's very positive and up-down volume is positive. We have no ominous signals today. Note we are under the influence of two Hindenburg Omens on the NYSE, which means a confirmed signal, which at least gets me paying attention. And I will be watching that 50-day. As long as we stay above the 50, I'm not going to worry about the Hindies. But a break of the 50 or a significant reversal during the day one day might want me to start thinking about, maybe we've got a bigger correction coming. The other thing that has me worried is the 13-week new high, new low ratio, and that's this green one right here. It is 0.7, excuse me, it's 0.94 on, actually put on my glasses, might be 0.91. 0.91 on the, no, it's 0.94, I was right the first time. 0.94 on the spider. It's at an area that you expect the market to take a breath or it's a day away. It's 0.88 on the NASDAQ composite, not that point yet. It is 0.95 on the Russell 2000, the lower right-hand corner, and 0.94 on the S&P 1500. So this rotation has come so fast and so hard. Whether I look at the buckets or I look at that green line of the 13-week new high, new low, I think I'm concerned. We've eased off of most of the negative divergence on the RSI and the AD lines, but you can still see on the NASDAQ composite, the AD lines have gone down. Of late, they've bounced as we've got newer, higher and higher highs. So I don't think we're out of the woods, and I think that especially on the other three, the spiders, the S&P 1500 and the Russell 2000, that we are going to be paying attention, I think, to that 13-week new high, new low. My go-to has been the T2121 in TC2000. I've used that for years. to, when it gets up to 99, 99 and a half, the market always reverses. And no, they don't tell you what they're studying, so this is different. It's the same basic formula for 13-week new high, new lows. I break it into different markets. We might look at the Wilshire 5000, but the TC 2000 number is at 98. I think we're a day or two away from this market saying, I need to pull back, unless something happens with the PPI and we get that on Monday. So I'd be a little bit cautious. Don't forget the Hindenburg Omens. Extension doesn't mean correction. It could just be a sideways move and work off some of the overbought. It could be a rolling correction where certain things sell off while things recover and you don't see much change in the indexes. But we are getting overbought and probably getting significantly so. If I look at the ratio charts, and I want to see comparison to the S&P. Bitcoin's been super strong. Communication has improved. Discretionary has improved. Staples has been weak and still looks weak. Industrials weakened but showing some life. Utilities, not so much. Technology's been the big strength. Real estate, a little bit of a glimmer of hope, but it's pretty low in its pattern. Industrials are picking up, not energy, not so much financials. And healthcare, it's not done much yet. Maybe it's getting ready to show us something. So market rotation. Technology's been in for a long time. We've seen industrials and communications come in and out. We've seen financials in and out. So it's that rotation, I think, that's keeping the market indexes up despite the sell-off of some of the leaders and the broad-based, perhaps overbought coming in. The JAS layout is where I look at all the stocks in the NYSE, NASDAQ, and Amex that are above $1 and 100,000 shares. Each one of these stocks is actually in a sector and an industry group and market cap. So I'm not the S&P 500, and when I go into the top down, I'm Jeffries 3700. So we can look very broad-based in the 3,700 stocks, healthcare led, followed by basic material, and cyclical, which is discretionary. If we look over here at the index industry groups, you can see the leading industry groups. We have clearly seen rotation. Auto, residential construction. I purchased Lennar early in the day. Paper, lumber, furnishings, pharma, department stores, luxury goods, chemicals, 1, 2, 3, 4, 5, 6, 7, 8. Home improvement and auto dealerships. That's bizarre. If I believed everything on YouTube, it would tell me that auto dealers are sitting on cars and having financial issues. I bet that's Carvana, but we'll see. So what we have here, 104 stocks. These represent the stocks in the top 10 industries in the top 3 sectors of my 3,700 stocks. And then let's just make that number smaller by cutting out prices less than 5 or 500,000 shares. 56 stocks, we could look at all of them, but let's just throw on my pullback and an uptrend filter. So I take away things that have just been run away and too far gone. And let's just see what we got. Capri takes a second to wake up for the first chart. And we could see here's a stock that had a huge gap down. I don't believe that that was a split, but I'm going to have Praveen, he listens to the videos and he checks. But we can see, and I'm pretty sure it was not. I remember there was a warning that day. Broke out above the 200. You could see it had volume, a momentum breakout, volume, a gap, a CPR, and an EMS. Relative strength is picking up, so is OBV. Do I like this pattern? No, I do not like this pattern. This is not something I typically buy, something that's so far down. But I do like the fact it's now above the 200. The 17's about to break above the 200. The 50's coming. You'll notice the high-low jump is at 100, and I say, who cares? It's only because the fact that these are inverted and the 200's closest. I don't pay attention to the high-low jump on a stock that's been going sideways for so long. It's buying a fallen angel. SN Shark Ninja, they make a lot of small appliances and gimmicky things in my house. Walmart sells a bunch of them. Kind of a loosey-goosey chart in my concern. On anything, you can open up here and look at fundamentals, get a sense of earnings growth, what the change was, very up to date. Was there a surprise? What the forward PE is? Do they have a dividend? So, a lot of people like this stock. It's kind of loosey-goosey to me. Not my cup of tea. Sleep Number, kind of like Capri, too far down. Dreamfinder Homes, I don't know enough about Dreamfinder. I could see that the earnings per share growth has not been so hot. Revenue has been growing nicely. I want the best in class in that group. And we're going to see on this list, we got a number of them. LGI Homes, we looked at last night, had another big move today. DH Horton or DR Horton, this is one of the better looking charts breaking out and going higher. Toll Brothers, nice trend with the breakout. I know PMHC, Taylor Morrison Homes, big breakout. Meritage, breakout. Here's Lennar, similar. I like the breakout above the 200. That's why I took some today. I think we found a nice little wolf pack, and there's probably a ETF if you don't want to buy individual stocks called Nail. And look at Nail. It looks exactly like Lennar and the one I looked at just before, whatever that was. And let's just see, does this thing even pay a dividend? No fundamentals on the ETF. So I think home builders look really interesting here. Then you got things like Home Depot um, making a move. If I can't buy a new house, I'm going to fix up my old one. Floor and Decor, which I thought was owned by Home Depot, but I guess not, making a nice run up. Here was KB Home, another very similar to Lennar, breaking above the 200. When you start to see an entire group of stocks trading the same way, you usually pay attention to that. And I think the home builders, and was Lowe's in here somewhere and I missed it? That would be another one I might look for as well. Um, so that's one thing I'd be doing is maybe looking at home builders. Now let's turn off the sectors. And I made the comment about autos. So let's just look at autos. Make sure I'm rotating here, recreational vehicles. We did see, all right, I give up. Let's see if maybe it moved. Auto dealerships. I mean, all three are up. I'm sure we're missing some. Rush Enterprises, nice breakout here. And again, I always look to see what are the earnings, what's the earnings per share growth. I like growing earnings. I like dividends. I like the chart pattern. I just don't like the fact that its earnings are kind of flat. And we're going to be comparing 87 cents versus 97. I like to see growth. That's one of the other things we're going to build in. I'm going to try and find stocks within 2 days with 100% quarter over quarter earnings growth. So we'll be able to combine some of the technical scans, and I'll show you those in a few minutes, along with the fundamentals, which we haven't put in yet. Another thing I like to do is to go into the top down, at the top down, sorry about that, into the impulse view. And here's my 3,700 stocks when I take off all the filters. And I could do the same thing that I just did in top from a top down, but I'm going to just go quickly bottoms up. These are some scans that I love. And one of my favorites is this 2-day momentum up. Let's limit price and volume, get rid of the small things. And holy Toledo, 82 of these in one day. Anybody that watches my video knows these are my go-to plays. These are stocks that have more than 1 day moves. Let's add some more filters. How about relative strength rank above 80? That kills it. I think that's turned off. My bad. I shouldn't have put it on. So let me go back here and reset this. that I think it'll be turned on. We had turned it off to do some work, and I guess it's off in the scan. Well, let's look for, I want weekly bongos up, so I know you're in an uptrend. I want you to be above the 200-day moving average. And I got 45. So let's look at these real quick. ADNT. First one takes a few seconds. The rest of them will go rather fast as we're pinging out to the server. All right, Adient consumer, nice uptrend here. A little bit of a pullback to the 17 and a breakout. I'm going to leave that on. Earnings came out the 6th. Earnings per share, good earnings per share growth. Slow revenue growth, but has a multiple of 13. I like all that. I could go here and read the news, what the metrics are saying. I can get their earnings call. I love reading earnings transcripts. You just click on the link here, and we're going to give you the earnings transcript um, and all the other news that's come out, Zacks, Motley Fool, and other sources seeking alpha. So I like the pattern. I might throw a weekly on it. Kind of looks the same. Um, I don't know what they do, but why am I looking at it? It's got these two dots here that are momentum. The relative strength has moved up. The OBV has moved higher. And it's coming out of a squeeze. ADT, the home security people, cheap stock, kind of loosey-goosey in my opinion. Lots of moves, but it's good earnings per share growth. It's got revenue growth, low multiple, 2.93. Dividend. ALV is a auto dealership, I believe. Auto Live Incorporated, and you could see it pays a $2.91, 2.91% dividend. It's got earnings growth, stubbed its toes here in the beginning of the year. It's going to compare 212 versus $1.84, a little bit of growth, but move, sideways move, and a breakout. I don't have a problem with that. I don't know if that would count as a cup and a handle and a breakout, be a funny looking cup. All right, what's the next one? Arcturus. Man, I looked at this yesterday and I thought about buying this. This is a biotech company. They've licensed out a lot of drugs to numerous different people. Um, they had their earnings on the 11th, so 2 days ago. Um, Talked about their pipeline. Seeing it moving after earnings and after the earnings statement should make me interested. So I might want to look at ARCT. Again, the history of my trading and these two dots in a row for momentum is it's a good signal. Not everyone, but it gives me an edge. ARQT, a similar sounding name, nice uptrend. Alibaba. Um, oh, it's kind of, a, I don't want to use the word loose because it's really not that loose. It's an ADR, so it's going to be very gappy. And you could certainly say it broke out of a trend line resistance today. It has my two momentums coming out of the squeeze. You can see the green on the relative strength and the white on the OBV have both flipped up. That's positive. Alibaba earnings are August 21st, so that would be a downside. You could see the last quarter growth and a surprise on earnings. BC, Brunswick Corporation, they make boats and other things. Kind of reminds me of Capri, something that's beaten up, that's coming back. That not only did it move nicely and finish near the close high of their day, it had the 2 day momentum signal. Earnings are out. CCL, Carnival Corporation cruise ship. We talked about Norwegian yesterday. It was one that I liked. Um, yeah, I mean, this looks good. Taking off here. Here's another version of the same, CUK. I don't know the difference. Digital Bridge, real estate. Again, all these are going to have the two dots, and you could see it breaking out from a downtrend. I don't trust this. I don't know this stock, but it did break out above. Now I'm going to shut up and just look very quickly. DMAC, SD Lauder making a nice move. FBK, FB Financial Corp. I think that's a regional bank. Again, earnings are to October, pays a 1.32%. Ferguson Industrial, not too bad. FITB, Fifth Third Bank, breaking out after pulling back to the 50. I like that. Breaking out here. Um, Nothing wrong with that. Fox and Fox A. I don't know anything about that except nice uptrend. Triple G, Graco Industry. They make things like strollers for my grandkids. GTES, Gates Industrial Corporation. Again, a pullback to the 50 and 2 days in a row of breaking out. Um, GXO Logistics, Bollinger Bands. Again, it's got to move above the 200 for me to get interested, but look at the volume that's come in with this reversal after earnings. Now, that's not a good growth rate, and that's not a good growth rate, but both of them are positive surprises, so it's being rewarded. Hog, Harley Davidson, breaking out above the 200. If you're a long-term position trader, you got an opportunity of buying some big franchises at a low cost. HTH, Hilltop Holdings, Financial Services, kind of sideways. Hubbell Corporation. Is this in the electrical? A lot of these electrical companies are doing really well because of data centers and their need. And you could see earnings came out end of July with a good growth and a surprise. Hexel, HXL, breaking out. Do you notice I haven't put one up here that I said is garbage, that I said I couldn't buy? Remember, I did a few filters. I filtered above the 200, which means I'm not going to get things that are in fast sell-offs below the 200. I put weekly bongo, which is my trending indicator, has to be bullish, so it's in an uptrend. And I eliminated cheap stocks. ITW, Illinois Tools, KRC, Kilroy Realty Corp. This one pays a 5.39% dividend. LADR, Ladder Capital. This one pays at 8.38. I think that's a specialty finance. LPX, Louisiana Pacific Corp. Basic Material. I think this is a wood provider. Small dividend. Meritage Homes. We talked about the home builders, especially the number that we're breaking above the 200 today. Nucor Steel, pull back and breaking out. Notice not one of these stocks is extended. Not one of these stocks has had a long run where it's likely to pull back. NXPI, pull back to the 200, broke out above the 50, up again. Semiconductors and automobiles. PGY, Pagaya Technology, no idea. Don't like this day here. I do a little bit of research. That was probably earnings day. It was earnings day. And earnings were massive. So it's just a 540% growth rate, 245% growth rate the quarter before on earnings. Good revenue growth rates. It's a small stock, 650 million, 56 cents coming versus 44 cents. That's 12. That's more than 25% growth rate. So maybe that's a problem. It's slowing down. Don't know what it does. I like the pattern, and it's Pagaya Tech earnings call. So you can pull up your earnings and take a look. PNR, Kent Air Industrial Gases, I think. Nice breakout after pulling back to the 50. And this is kind of a cup and a handle and a breakout if you're an O'Neillian. RNST, don't know this, Resident Corporation, 2.5%. Roiv is another biotech stock. I don't know if I make anything of this. It's going too sideways. Site 1, landscaping, pull back to 200 and a nice move. I like the pattern. No dividend, and $1.28 is coming up against 97 cents. SSL, Basic Materials, Sasso Limited. Don't know what this is. But again, similar to the home builders, this one broke above the 200, really had a successful retest. It looks like it's going higher. ST, Sensata Technology, again, I don't know what it is, but so many of these have had a quick pullback and now they're going higher. Tex, Terex Corp, pull back and breaking higher, something to do with home building, I'm sure. Toro, TTC, the lawnmowers, Hey, we're breaking above the 200 here. We got two momentum days in a row. We've got breakout. We had volume. We had gap. We've got a CPR and an EMS. Pays a 1.79. We are going to see an earnings of 122 versus 118, kind of flat. Alta, um, I liked it back here when it had a bit of a flag and broke out. Had a flag here and just broke out again, and it's got the double blues, and it's only the double blues that are on the bottom. These that are the double momentum. VIP shop, I looked at this one today. Should have taken it, broke out here. WRBY, these are cheap eyeglasses, I think. Um, Again, they must have had a well-received earnings on the 7th. 33% growth. For whatever reason, it traded higher, came back, but now it's moving higher. And lastly, XHR, which is a resorts. I don't know anything about them, but breaking out above the 200. What's the point here? I could be like everybody else, and I could come in and pound the table and say, go buy Apple. It's the best stock in the U.S. stock market. Yeah, maybe it is. Notice what it had the other day because we talked about it. It had the two dots in a row. Time to buy Apple was breaking the 200. All right. Buy Netflix. We know it's the best stock in the world. Certainly of the streamers, but it's pulled back hard. It's getting ready. All right. How about Microsoft? Buy Microsoft. It's the best stock in the world. Everybody can talk about these stocks. I want to find you things that no one knows about, things that are just starting their move. Microsoft was actually down today, 1.64%. What else? Tesla. Tesla looks different. Tesla looked like it was setting up and it had a negative day today, but so far a decent week moving up off of the 50 and the 200. You just have to deal with the Elon versus Donald stuff. Google. We loved it when it broke above resistance. Has it gone too far? Well, it's had a big move. Um, High jump's only at 67, so maybe it can go higher. It's easy to talk about those. Amazon, not as good of a move as some of the others. Pull back here. Amazon came out and hurt me today. Amazon, which I have a decent position in, I was happy it was up, came out with same day delivery service. And unfortunately, I also have a big position in this guy. And this one did not like the Amazon home delivery. My guess is that's overdone. And why did I buy it? Because I like drawing trend lines and buying breakouts, especially when that breakout is associated with momentum breakout and a volume, and the relative strength has moved up off of the moving average. So it's easy to talk about those big ones. Everybody wants to hear them. I like finding things that are actionable today that can become the next big mover. So comments are welcome. If I should just talk about mags like everybody else, let me know. Um, Hope you enjoy this and come to my meeting, sign up for my top down trader, and we'll see you tomorrow.